Sometimes this market can be downright confusing. Consider what just happened to Columbia Sportswear, COLM. That's the apparel and footwear company behind the Columbia, the Sorel, Mountain Hardwear, Montreal, and Prana brands. This is a terrific company with a history of strong performance. And last night, Columbia reported yet another spectacular quarter, best in this whole group, delivering a 12-cent earnings beat off of a 33-cent basis. It's huge on top of a monster revenue beat, with strength across all its brands and management raising their full-year earnings guidance. It's just a classic flat-out beat. Yet the stock today went down $1.59 or 2.64%. I found this decline pretty puzzling. And the only rational explanation I could find is that despite giving solid guidance, management's commentary in the conference call may have been a bit too conservative, with the company talking about some bankruptcies at its wholesale customers, mentioning more cautious orders for the fall. Still, I believe in this company's ability to deliver regardless of the environment. When every other retailer was getting crushed by the insanely warm weather not that long ago, Columbia Sportswear blew away the numbers. They did it again today, and I bet they continue to do so in the future. Don't take it from me. Let's check in with Tim Boyle, the CEO of Columbia Sportswear, to learn more about the quarter and where his company's headed. Mr. Boyle, welcome back to Mad Money.
Well, Jim, thank you very much for inviting me. It's great to join you as always.
Well, Tim, first, I just want to say that I regarded it as a miraculous quarter because you did have a couple of companies that you supplied to that went bankrupt, and it really didn't matter, right? Although you're such an honest guy, you spent a lot of time talking about it on the conference call.
Well, you know, it's interesting, and this is not a disparaging comment about our investor base, but people get fairly myopic about the company, thinking it's just a U.S. company. And yes, we always want all of our customers to do well, regardless of the geography. But, you know, we have a big business outside of the U.S., and we like our customers to do well, but we're not strictly dependent on U.S. customers. And
it's certainly clear from this conference call that you're far less dependent than many of the apparel companies I deal with on actual bricks and mortar. I mean, you're more of a direct-to-consumer outfit than almost every company I deal with.
Well, we have a great business that we've been growing with direct-to-consumer, but we always consider ourselves to be a supplier of wholesale merchandise to customers that have their own stores. And many of our stores, frankly, that we operate do well, but our customers are always generally much better at selling merchandise to retail than we are. So, you know, we want to make sure that we have a proper balance on that kind of a channel mix. And of course, you know, the electronic commerce part of our business and our customers' business is really growing and making an impact.
I like to always just talk about some of the new things that you have and the history of them. We talked about Prana last time. Sorel's history is kind of interesting. If you can tell our viewers what that started at and what area it is now, I think it's a pretty interesting journey.
Well, you know, we bought that company out of bankruptcy in 2000, and it was strictly a men's utility, weather-dependent winter boot business. In fact, the biggest customer when we bought the business out of bankruptcy was Walmart. And we thought there was something with that brand. And frankly, our team there, led by Mark Nenow, who runs the footwear business and who now runs specifically our Sorel business, realized, hey, there's something going on with Sorel. We really don't know what it is, but there's some aura about it. And so, frankly, he's worked diligently with his team to make sure that the brand was much less winterized, much less dependent on weather. And frankly, today, it's much less dependent on men who are not necessarily the best shoppers. So it's about a 70% women's business today and much less dependent on winter weather. And frankly, it's been thriving.
If you had to look at the among the mosaic of brands that you have, do you think that either Sorel or Prana one day could be as big, if not bigger, than the actual Columbia namesake?
Oh, I think so for sure. You know, the Columbia business, while we've been diligently working to make it non-weather sensitive and less men, still is about 50% men. And both Prana and Sorel, for whatever reason, resonate with women. They're both around 70% women. And women just buy more merchandise. And frankly, the important thing is that those brands understand women and know how to resonate with them and how to make products that are important to them. And so, yes, I could certainly see those brands being bigger than the Columbia brands at some point in time.
Secular growth still for the yoga concept, but also for the outdoor rock climbing concept, meaning rock climbing like almost like the theme park rock climbing. These are also in your wheelhouse.
Exactly. That's where Prana's roots are, is right in rock climbing and yoga.
Now, when I look at what happened in Korea, is that something I need to worry about? Because I didn't quite understand it from the conference call.
Well, Korea for us has been a terrifically, very profitable business for the last 15 years. But the business, the industry of the outdoor apparel in Korea grew at a very rapid pace. And and invited lots and lots of brands into that market. European brands got in there, and some brands that were not even in the outdoor space decided that they were going to enter and offer outdoor products. It just got overblown. So we're right-sizing the business there. We've got the balance sheet, which is another thing that investors occasionally miss about the company, is we're going to be there for the long term. The balance sheet's good. We've got a great manager there that's going to be running that business. We'll have to do some adjusting to make sure that we're in the right place from an SG&A spend there. But we're going to be there for the long term, and it's a terrific market and one that will grow again for sure.
Well, look, I want to congratulate you. I thought it was a great quarter, great balance sheet. So many good things are happening there. It's great to see you, Tim Boyle, CEO of Columbia Sportswear.
Thanks, Jim.
Guys, this is the growth one in this industry right now, and I think that it was obscured by 2 bankruptcies at 2 sporting goods stores and Korea. You X them out, and even you get warm weather, and you still had a great quarter because they've got the right products. Bad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.